We have come to an end of a somber week on the Nifty, and that has seen a correction of 3.7% for the Nifty. In fact, it was a gap down that we saw right from the beginning of the week, and post that the Nifty tumbled and closed near the lows, which in a way indicates that there is some kind of profit booking that is kind of coming through. The Nifty closed at a level of around 11,279, and simultaneously we have seen all the sectoral indices closing in the red for the week. Indicates the level at which the various indices as well as the overall scenario and sentiment for the market is looking kind of bearish at this juncture. Now, the important characteristic of this move is the deep corrections that the heavyweights saw within themselves. The likes of the banking indices, the likes of HDFC, like of Reliance, which have really seen deep cuts this week, and which in a way were leading kind of the stock takers that were kind of pushing through the Nifty at higher levels and to all-time highs as well. So certainly a bit of trouble that is kind of brewing through. On the broader market front as well, we have seen that the mid-cap as well as the small-cap stocks have corrected quite a bit, including the indices which are once again in the bear territory. So to say, they have already retraced more than 50% of the recent rise that they had kind of taken through, and that certainly means that the sentiment has taken a bit of beating. In this scenario, we would like to go with the defensives, especially the likes of IT, which would benefit because of the depreciation of the rupee vis-a-vis the USD, and that certainly seems to be on the cards at this juncture. On the stock specific front, based on this hypothesis, we are kind of putting through Tech Mahindra, which has closed at a level of around 808 and shows a lot of promise in the form of confluence of varying moving averages, as also a deep consolidation zone around the 810 to 800 mark. So we kind of play bulls in case of Tech Mahindra with upside targets up to 840 to 860 while maintaining a level of 790 as a stop loss. On the contrary, given the fact that the markets are kind of turning down, we would like to go with a sell call in Bharat Electronics BEL, which has closed at a level of somewhere around the 90 mark. We are contemplating it to go down by around 10% over next few weeks and could kind of move down to a level of around 80. On the flip side, the higher level of around 94 would serve as an important stop loss. Therefore, we feel that we should certainly be cautious as we get into the mode where the election results are coming through, and certainly a bit of caution is advised, though largely the negative sentiment seems to be discounting in the longer term. Thank you, and I hope you have a profitable trading session going ahead this week.